Welcome to Home Buying 101. I'm your host, Francisco, and with me today is Bianca Betancourt from AZ & Associates. Bianca, how are you doing today?
I'm so good. So good.
Bianca, tell me how you got into the real estate industry, why you got into the real estate industry. Tell me your life story.
Yes. So my last name's Betancourt. I don't know if you said it right.
I did. Betancourt.
Yeah, that sounds right.
It's because it is right.
Okay.
Gosh, read a book.
So yeah, let's talk about me. So I joined AZ & Associates, which is when I first actually started practicing real estate back in April 2023. Started really practicing towards the end of April, early May, and I'm about to hit 2 years. I was still working at Apple during the time, so that's where me and Francisco bonded because he's a tech guru. And I ended up leaving just this past July, so it's been a roller coaster for sure. I really wanted to get into real estate after working for an investor. I don't know if you knew this, but I worked for an investor when I was 18 years old as an assistant. He
Like
only
doing
spoke.
fix and flips, or what are you guys doing?
He had a bunch of rentals in Maryville. Like he owned most of Maryville. I don't know if he still does. But I was like the English to his Spanish. I spoke with all the escrow officers. He really wanted to help me get into real estate. And I was totally on board, but I wanted to go to college. Went to college, went down the tech hole, and realized that I was still itching to be in real estate. So here we are. And we are on the free group. I'm working with Felipe Reyes, and which is so funny. That used to be my brother's friend in high school. And it's like a full circle moment. I went to school with his sisters, and now we're working together.
What did you graduate from college with?
I did a business with a communications minor,
Nice.
and I only went up until my associates. So I have some credits towards my bachelor's, but after COVID, which is when I started going to school for real estate, I just focused on real estate.
That's awesome. That's awesome. So that's awesome that you worked for that investor. So how long did you work for him?
I was him for at least almost a year. Yeah, it was a short-lived, but one of the most memorable times because it was an industry I actually enjoyed.
That's awesome. How did you feel about that real estate test?
I passed on the first try, so it wasn't too bad. It was just more of like really just anxious because I was like, I don't want to spend the money again to like, take this test. So I was like, I have to like pass. But I spent like 2 weeks like on do not disturb, not talking to anyone, work, study, work, study, work, study until I passed.
That's how I passed all my licenses. I just honestly made it my job where I'd study from 9 to 5 every day.
Yeah.
It was a job. Like that's my job is to sit in a room and read this book.
Yeah, no distractions, ignored everyone's calls. But when you want to get something done, you have to be like 100% committed.
Of course. And that's what you have to do. Like, that's why I said like from 9 to 5, it was just a job. So after 5 o'clock, I could do whatever I want. I could go out, I can go hang out with my friends. But I did both tests in a week, and it was honestly just a 40 hour studying session. Like I studied everything and anything I needed to do. So
yeah, that was definitely me. I had like dedicated time, and that's really good. That's like the best way, especially for anyone that wants to get into real estate. It's like you have to like have your nose in the book every day up until your test.
Basically. So the reason I wanted to have you on is I know you guys have been, of course, helping a lot of families. I think you guys helped 140 families last year.
150?
150 families last year. So a lot of that came down to, of course, finding what worked best for them. So I wanted to have you on. So, of course, we could talk about, of course, owning versus renting, but also a lot of people are discouraged because they don't think they could buy a home. They don't qualify or they don't have enough money saved up. And
that part.
What was that?
I said that part.
That part. So I wanted you to come on and we can us have a discussion about some of the clients you guys have worked with in the last year, and just basically beating out the stereotype of you can get into a home. You just have to know who you're talking to and what programs are out there, I guess.
Right. No, it's a really good way to start the conversation. So I primarily focus on about 80% of my clients are first-time home buyers, and I know that's very true for our entire team, if not all. And that is like the really like the theme is that like I didn't know I could own. Like people just are not aware. and they think because of, economy or, cost of living or rents that they can't get to that. So our biggest thing is like making sure that we know the programs that they qualify for, because there's tons of programs that can help you get into a home. And the reasons why they're out there is to stimulate the economy, right? So there's so many programs that they can take advantage of that will A, cover their down payment, B, give them grants towards their closing cost, or C, cover a percentage of their down payment so that they only bring very minimal to the table. Because we all know first-time home buyers, we don't have an arm and a leg to give as a down payment. I was a first-time home buyer back in 2023, and that was the case for me. I didn't have a crazy big down payment, but I knew that I wanted to own.
Okay. So can you talk to us through maybe one of your recent situations where you did have a client that didn't think they were going to qualify, or didn't think they had enough money to, of course, put even a down payment or go into a home, and kind of give me an example of how much they were paying rent-wise and how much their mortgage came out to?
Yeah. So recently we just helped a family get into a home, and I still remember this conversation. We talked to them in November, and they closed just a week ago. Actually a week ago, almost today. And they called us and they were just like, hey, like we've talked to 3 other people. We just don't know. We know our credit is bad. We don't have money. We just need to know what we need to do so that we can own maybe in a year or 2. We talked to them, and it was Robert and I, we actually talked to them, and I remember that conversation. We knew exactly what happened that day because it was such a like epic conversation. Because after talking to them, we're like, your credit's not as bad as you think. By the way, did you know that the minimum credit score to own is 580? And they're like, oh, okay, like we're in like the low 600s. I thought we needed to have a 700 because that's what this other realtor told me. And I'm like, I don't know who you talked to, but that's not right. And then we went over their income, realized that they could qualify and that they could own a home in the areas that they wanted to be in. So a week later, they were qualified and they couldn't believe it. They were like, oh my gosh, I can't believe this. And they were paying, I don't know exactly how much they're paying in rent, but I know it was like around $2,000, if not a little bit lower. But they had a very small apartment. I think it was a 2-bedroom, and it wasn't enough for their family. So fast forward, they're qualified. We're under contract. I remember we're 2 weeks into under contract, and we got them this phenomenal deal. All of their closing costs were covered. They had no down payment. They brought very minimal to the table to just get the deal done. I think they paid $3,000 total to get into their home. It was crazy. And halfway through, they're like, hey, so when do we close? Like, when does this all like happen? Like, they were just so like surprised. And I was like, oh my God, did I not make it clear that you're closing in like a couple weeks? And they're like, oh my gosh, we're just so scared. We were just thinking that like this can fall apart, or maybe it's going to fall apart. And they just didn't believe it. We close and they're like crying and they're so happy. And they're like, we really thought that this was not possible for us. And it took them trying with 3 other realtors to finally get to me, the 4th one, that made it happen for them. And it's just a lack of knowledge with some realtors. And I think that's like the common theme we hear. We talked about it yesterday in the event, that sometimes these clients meet with realtors who just don't know about the program. And Rosie said it best yesterday of like, although we're realtors, it's very important for us to know these lender programs to understand if these people can buy or not. Because we're the first person they talk to. They don't talk to the lender first. They talk to them after they meet with us. So having that in my back pocket and understanding like, okay, the minimum credit score to get into this program is 600. Perfect, you're there. FHA requirements. So understanding what FHA requirements are like, understanding conventional requirements is very, very important.
It's just honestly starting the conversation with you guys too, because you never know until you ask.
Yeah. And so people are really afraid. So I don't know if you've seen, my content is very much focused on like the minimum credit score is this. If you make this much an hour, you can qualify for this, to make it more relatable, because you put this, dollar amount on a house and nobody knows what that means.
So can you give me some examples of some of the ones you've done recently where, let's say, what's the minimum right now that you've not advertised, but you've kind of educated people on? What's 15 an hour, 20 an hour? What are we talking about right now?
Yeah. So like if you One of the issues that we just made was if you and your partner make $15 an hour each, which accumulates to $30 an hour, you roughly qualify for about $400,000. That's with no debt. So once we talk to you, we figure out your debt and we start adding that into the picture. But the minimum that we've been putting out there is like if you and your partner can at least bring in $30 an hour, 40 hours a week, full time, then you can definitely qualify for the average cost in Arizona, which is around $400 to $450.
And then I know we talked about this before we got on the show. How much is the average rent right now in Phoenix?
Yeah, so the average rent in Arizona is about $1,900, and that's including studios, 1 bedrooms, 2 bedrooms, 3 bedrooms. So it's taking the entire average. Now the average for houses is $2,250, so a little over $2,200 a month in rent. And with getting into a home, depending on the interest rate, depending on the program that you get into, you can really range anywhere between $1,900 if you're going into a condo to, $2,800, $3,000. It really just depends, depends the cost of the home. But understanding that like you can own something for $1,900 a month, it's like, why are you still renting?
Even though, even like you said, it was 22, 23 for a house, but let's say, for example, you have to pay an extra $200-$400 to own a house instead of rent, you're building equity.
Yeah. I mean, and on top of it, when you get into a rental, you're typically having to pay the first month and last month. So if a home's $2,250, let's say it's $2,300, you're already spending over $4,000, $5,000 to $6,000 after deposits, credit check, fees. So it's like you can get into a home with less than $3,000. Some clients have gotten all of their deposit back and paid nothing at closing. Whereas you're paying $6,000 to get into a rental that you don't even own.
And then you're not stuck there, but you basically are stuck there just because you don't ask the right questions or you don't have the right conversations where you could be owning instead of renting.
Yeah. You're on this constant hamster wheel because, you think things are getting more expensive, which that's the freaking power of real estate, right? Every year you're gaining appreciation if the market is Arizona. Let's be real, right? Arizona appreciates year over year, and you're losing out on that, and so you're on this constant hamster wheel thinking, oh, well, things are more expensive now, so I still can't own. And you just keep convincing yourself of this idea, and it's really just not true. And on average, we're looking at the stats right now, the average person spends $330,000 in rent before they become a homeowner, which is crazy number,
That's a lot.
And if the excuse is like, I don't have a down payment, well, there's your down payment, right? It went all to rent. So yeah, it's definitely just lack of education.
And when it comes to down payment programs, because I honestly don't know this right now, just talking to you, do those work just for resale, or can you also use down payment for new builds?
Yeah, that's a phenomenal question. So yes, you can use them for new builds. It's a negotiation battle, of course, of, trying to get seller credits and stuff like that. But as long as you have a good person on your team, a realtor, or even just having a good team in general, like the free group, we're going to get you the concessions covered. So you can really get into a new build, pay a 0 down payment, get your closing costs covered, probably just pay for your inspection, and now you're getting into a brand new home.
Okay. And then I've always wondered this, and I've just never asked just because I honestly am embarrassed, but I'm going to ask anyways. Concessions and credits. How does that work? Because are they interchangeable? What is a concession? What is a credit? Because I know right now the market we're in, we're getting a lot of concessions and credits from the seller to the buyer. So what is a concession and a credit? Because I always hear, we're getting 4% concessions, 3% credits. I'm like, what does
that mean? No, and that's a good question because sometimes even I get in the mix of trying to understand the difference, but they're basically almost the same thing. When we think of concessions, we think of mainly closing costs. When we think of seller credits for resale, for example, we can get seller credits for something on the Binzer, which is the home inspection, right? After the home inspection, if the roof isn't up to date and you need to do repairs, you can negotiate seller credits to be applied towards the transaction, and you can use that to pay out a roofing company, or you can use that to apply to the amount that you need to bring at closing.
So credits honestly can bring down the final sales price, but can concessions do that too, or concessions are just for down payment or stuff like that?
So seller credits and concessions don't necessarily communicate with the purchase price. They more so communicate with the fees involved at closing or using the seller credits to invoice companies to make repairs towards your home. So we did that recently with our last closing is we invoiced an LLC to come fix the roof after closing, which is just small repairs, nothing crazy. We invoiced the company so that they can fix it out of the seller's pocket.
Okay. But basically, it's like you said, they helped bring down, let's say, what you have to bring down
For closing.
for closing.
Yeah.
Okay.
Yeah, and that's an accumulation of title fees and lending fees that buyers are responsible for, or on the seller side, again, title fees is what they'd be responsible for. So, yeah, it just helps bring down the cost of all of that.
Okay.
HOA fees, like insurance fees, you know how that works. So, yeah, all those fees.
Okay. And then can you give us another example of another one of your DPA clients recently?
Yeah, so we did another one. This one was really fun. I had such a pleasure of helping him. His name's George, and he utilized a grant program. So this grant program it's called Home Ready First. It's a grant program that basically gives you $7,000 in a grant, meaning that you get that for free. Like you don't have to pay that back. It's your money. So you can either A, apply it to the down payment, or B, apply it to your closing costs. So regardless, it's your out the door cost. So you can really apply it however you want. But that program was nice because on top of it, we got seller credits to cover his closing costs. So he utilized the $7,000 towards his down payment. So his down payment was $9,000. So out of the $9,000, he only paid $2,000 of that because he was able to use that grant program.
And when it comes to, you brought something up that I want to ask. When it comes to down payment assistance and grants, it just depends on does it depend on the program if it's repayable or not?
Correct. Yeah. So the other down payment assistant program that 100% covers your down payment is forgivable after 5 years. So you basically, as long as you intend to live in the home, 5 years is going to fly by for you. So after 5 years, you're no longer responsible for paying that back. But if you move within that time frame or decide to sell at year 3 or 4, you're responsible for repaying that second loan through the sale of the home. So that would be subtracted from your profit.
And I know I've seen a lot of these grant programs or down payment assistance programs. Some of them are even city/town wise, where there's like an Avondale grant program. I've seen it up to like $50,000. Yeah.
So that one, I remember Felipe was talking big about that one. So that one has more requirements, right? Whereas these grant programs and, down payment assistance programs are FHA guidelines, which are pretty like fair. When it comes to like the 50,000 down, like you have to be in a certain AMI percentage, so the average median income. So you can't do it in certain cities. So
Makes
like
sense.
if it's a certain percentage of like 86%, it can't exceed that specific income. So that's what makes it a little bit difficult because it goes off of like per city, and every city has a different AMI.
Okay. Can you go more into, I guess, just making people feel comfortable, like at least start the conversation with you guys about these programs, just because, like you said, it's better to own something than just sit there and pay rent. Like everyone's like, oh, the interest rates are too high. But like everyone says, right now you're paying 100% interest compared to whatever the interest rates are today, 6, 7, 8, 9%.
Yeah. I like that analogy of like 100% interest when you're renting. Yeah, because you don't get anything out of it. But one thing I would suggest anyone who like is currently renting and probably is thinking about owning, thinking that they can't do it, is just like having the conversation is, again, free. And then B, what I do with every client is like, not every client's going to qualify right away. And that's completely fine, but that doesn't mean that you're not going to get the full attention and the effort when it comes to creating your game plan. So when you're renting, if you don't know how you're going to get out of renting, you're going to be renting forever. So having a game plan of like, how do I get out of renting? Do I need to work on my credit score? Do I need to make more money? Do I need to get a co-signer? understanding what your game plan looks like is very, very important. And like the number one thing that stops people, honestly, if I'm being quite frank, is the credit score. And that's really the biggest thing. And then if anything, the next thing would be income, where like they may need someone else to be on the loan because maybe they have a really big car loan, or they have student loan debt, or they have some type of debt. But the biggest thing that we see is credit. And that's like the easiest thing we can fix because we offer credit enhancing services for free. So it's like having the conversation and increasing your credit score is all free. So like, why wouldn't you message me?
And you said 580 on certain programs, 600 on certain programs, correct?
Yeah. So 580 is what you need to qualify to buy a house. So if you're going to be using a down payment, then at that point you don't need a 600 credit score. The 600 is for the down payment assistance program that will cover your down payment. And in order to do that, they need a 600 credit score because, like anything, if we're going to lend our friend money and they have a history of not paying back, that bank us would not want to lend that friend money. So same thing with banks, if you have a history of not paying on time or not paying, they're not going to want to lend to you. So having a 600 and above is the minimum, which quite frankly is pretty good.
That's awesome. So I'm going to have you debunk the down payment myth where do I have to have 20% down to buy a home?
Yeah, I love this myth. So the reason why I love it is because when I first got into real estate, I thought I needed 20% down. I had this myth that I needed 20% down to avoid, PMI, right? The mortgage insurance. So when I calculated it and I sat down with a lender and calculated it, per every $10,000 that you put down, it's only saving you anywhere between $50 to maybe $70 a month. So let's say you put 20% down, you're saving less than $200 a month. You're saving anywhere between $100 to $150. It just depends on the home, right? But when I realized that, I was like, why would anyone put so much down if they don't need to, or even 20%, right? It just depends. But like if every 10,000 is only saving you $50 to $100, it's really not worth it at that point. But give out every scenario, right? We show people every single scenario because after 20%, you cancel the primary mortgage insurance. But then there's also another program that's 100% financing right now with no premium mortgage insurance. So it's like there's so many programs that debunk this idea that you need 20% down or you need $20,000 to get into a home.
So what do you need to qualify for a loan? How much do you have to bring in as a down payment?
So normally for conventional, it's 3%, and FHA is 3.5%. Okay. And investments are 5%.
And what I think is cool, and it might happen again, where you buy something today and in a year or two, you can honestly call because you've built so much equity and you can get the PMI removed because you've built equity just naturally.
Yeah.
Through, if let's say, for example, we have another surge of purchases and people start overbidding and doing all that fun stuff. Like my brother bought in 2020, and now just by itself, the house is built like over $150,000 of equity.
Oh, yeah. Geez, my brother bought in 2019, and he like doubled his equity almost. And I was like, I just couldn't believe it. And like, he couldn't believe it. 2020 was like a very interesting and it was life-changing for a lot of people. But yeah, like, I mean, we bought in Waddell, right? Mm-hmm. So like, even my house now, and I bought almost a year and a couple months now ago, and I already have $30,000 to $40,000 in equity, and I'm just like, that is insane.
I need to check how much mine is because I still haven't checked.
Yeah, start checking what they're like selling your house for. It's
the
insane.
one I bought in Avondale hasn't built equity. I've looked at that one. I'm like, should I have bought this one? Yeah, but it hasn't built equity like I wanted to.
And like Robert actually says this really well when we talk to first-time home buyers. It's like, it's not about the type of home that you buy. It's about getting your foot in the door. Mm-hmm. Because as soon as you get your foot in the door, like, you're going to build some type of equity. There's going to be some appreciation.
And that's why I said it's all about starting the conversation. If you start the conversation, you won't know where you stand unless you start the conversation.
Yeah. And a lot of people are afraid of it. And it's just, I think it's the fear of rejection because a lot of people have been rejected. Like my last client, that was the biggest thing. She's like, my boyfriend kept telling me to reach out to you, to message you. And I just didn't want to because I just got so many no's. And it's fear of rejection's a real thing. We all have it. I have it. I don't know if you do, but I definitely do. And fear of rejection is what stops people. So I try to do my best to A, be approachable and B, relatable. And the last part is making it simple. So giving out as much information as possible to allow people to make the executive decision like, oh my gosh, I do qualify.
Also, another thing is we listen to people that we shouldn't listen to. Like our aunts or uncles bought 10 years ago or 20 years ago, and they're like, I bought this house for $75,000. Why are houses at $400,000 now?
Oh my gosh. I'm like crying and laughing because this is so true. And like, I posted something the other day that said like, don't stop getting advice from people closest to you and start getting advice from people closest to your goals. And that one like hit so hard because I was like, that's so true. And that's like the thing I had to do, because my whole family thought I was a little wild for, getting into real estate. Like, oh, she's going to be a realtor or whatever. And like leaving a Fortune 500 company where I wasn't making bad money. Like I was making decent money. I could have bought a house with that. But I wanted something more. So like, I think listening to the people closest to you can sometimes hinder you. And it's not because they hate you. Who knows? But I know it's because they love you, right? They want the best for you. They want you to make the right decisions. And sometimes that can stop you from making the right decision.
I didn't think it's also they just have a sour taste in their mouth because they had a bad experience. So they think if they had a bad experience, you're going to have a bad experience. And one time I remember I was talking to a client and I was more competitive on the insurance quote. I was giving her much better coverages. And she's like, and I think it was probably like the 5th or 6th time I had talked to her. It was the end of the month. I was already on like my wit's end talking to this client. And she's like, my brother advised this, this, and this. And I snapped. And it was a Friday. I remember it was a Friday end of the month. And I was just like,
is your brother the insurance agent?
And I said, and that's exactly what I said. I was like, how long has your brother had his insurance license? And she's like, huh? I'm like, how long has your brother had his insurance license? I doubled down. I was like, how long has your brother had his insurance license? And she's like, oh, he's not licensed. I'm like, then why are you listening to him?
It's 1,000% true. Like people will listen to like their tia, their dad, their grandparents, their brother, their sister before listening to like the expert, the professional, like the person that does this every day. And that's definitely a barrier that I think we all like run through in this industry is like everyone has that uncle, that tío, or like that family member, or even just friend that's like, no, you probably shouldn't do this. Or like they try and exert this like expertise that they just don't have. And that happens a lot. That happens so much.
And I think there's an extra level of that with us being Hispanic too. It's a whole other level of that on top of that, us being Hispanic, where you don't want to fail, or you don't want something to go wrong, because then your family's not going to ever let you live it down. It's
they'll like throw it in your face. I told you not to buy.
the best thing, of course, about being in Hispanic culture is your family loves you when they give you a nickname.
Yeah.
But so they'll give you a nickname for buying a house, and then for closing on it, they'll call you the El Broqui or something.
El Broqui. Mira el Broqui. Aquí viene el Broqui.
Aquí viene el profesional real estate agent que compra casas y después
que perdió la casa. Yeah, they won't let you live it down. It's my last client actually said that. They're like, man, I knew I had haters, and like they were like wishing on my downfall this entire time. He's like, and the funny part, they were all family. And I'm like, oh my gosh, I'm crying because that's so true. But
yeah, you kind of have to, of course, do your research, find stuff out. Yeah. And like I said about also, like a lot of people that are telling you, no, don't do it. They went through a traumatic experience probably in 2008, 2009, where they lost their home. So it sucks that happened and that it put them through that. But you have to do your research and not let other people's opinion also affect the chance that if you can buy a home, if you can find a down payment program or just find a way to buy a home, it's better to be in a home than paying someone else's mortgage.
Yeah, I think even apart from doing your research, it's just like reach out to someone and like don't stop until you get to your goal. I think that's where some people lack, is like they just kind of give up or they get stressed out. And that's it's very natural to feel those emotions. But more than anything is like you have to try. If you have this goal, like just focus on it. There's going to be people that are going to help you get to it. And I mean, you really just have to let go of other people's opinions.
Of course. And you just have to educate yourself, and you never know. You might be listening to this and say, I don't think I qualify, but give it a try. If you qualify, you might be in a new home in the next 30 to 60 days.
Yeah. And I saw this thing that said, and I totally resonate with it. It was like, don't wait for the right time to buy. Buy when it's right for you. And you won't ever know when it's right for you if you don't try and if you don't start that process and if you don't put yourself in that position. And trust me, it's like, it's a very vulnerable feeling of like, hey, like I want to buy a house. Like, what does it look like? Like, can you help me? Like, it's a very vulnerable thing to do. So shout out to everyone who's ever messaged me and worked with me, because I really do appreciate that and I don't take it lightly.
And it's funny that we also resonate with so much with like sayings and memes. So I'm going to give you two of them really quick. First of all, the first one, how old were you when in 2008?
In 2008, I was, let's do some math. I think I was 13, 12, 13.
Why didn't you buy a house in 2008 when you were 13?
Oh my gosh, I know. Like, it's a reoccurring thing
The
in my
best
head.
meme. It's like a little girl like, I shouldn't have been playing in kindergarten when I should have been buying a home in 2008.
I should have bought a house when I was in middle school. Yeah.
Exactly. And the second thing is, it's like, when's the best time to plant a tree? 20 years ago. When's the second best time? Now. So it's you could have bought a house 20 years ago in 2008 or 10 or what is it? 15 years ago in 2008, whenever that was. But the second best time to do it is, of course, now. Like, start the conversation at least.
Yeah. And what's scary too is that these developers are buying more and more land and developing more rentals, which is scary because it's like, are we really trying to drive out homeowners? You know, because next thing you know, like the ones that own everything and all the real estate are just going to be developers.
And that's what we were talking about yesterday at the event, where it was like, because the first one I ever saw it's on the corner of 91st and Lower Buckeye. It's a huge community where they've just bought a lot of homes, and then by us, I think the one I saw was.
Are they new builds?
Well, yeah, on the corner right there, where across the street from me is right there on Citrus and Waddell is that's a leasing community.
Yeah, I forget the name of it.
I don't know
which one you're talking about.
I can't remember what it's called right now, but that's going to be all rentals, and then
they're 1 stories. They're like 2 bedrooms.
And then across from us on like Cactus, I want to say Cactus and Saraville. I think there's another community right there. There's another one I think on Greenway and Saraville also. Yeah. And they're just popping off. And like we said, it's like they're buying these and they're just creating rentals. So they're just driving people to keep on renting when they can own. Do not let
developers be the market share.
Talking about where we live, did you see that they're building a Home Depot?
They're building a lot of stuff. They're building a Target too.
Well, the Target's been there for a while, but they're building a Home Depot on Cactus and the 303. They're building an
That's good.
They're building an EOS right there.
That's so good.
Where the Target's at, there's American Furniture Warehouse, and then I was looking at the Monument Sign. There's probably going to be another big store there because there's another space for 1 or 2 big stores, and then probably a bunch of small ones.
And you know what that contributes to?
What's up?
Our appreciation.
Oh, of course.
Yes.
No, we bought at the right time, right?
Yeah, I remember like.
Except you have a big warehouse next to your house.
Okay, we don't want to talk about that.
So Bianca's got a big warehouse next to her house. We still don't know what it is.
We don't know what it is.
But the funny thing is, one day I just drove by and I texted her. I'm like, what are they building next to your neighborhood?
I thought it was a big cloud. When I woke up and I like opened my door and I was like, what? Why does the sky look like that? And I was like, oh my God, that's a wall. Mm-hmm. Yeah. I mean, I bought in that neighborhood knowing that there was going to be more to come because there's nothing. It was just dirt. And now all these things are being built, which again attributes to your equity and your appreciation on your home. So honestly, you have like, if you're not working with a real estate agent or someone that is an expert in the area or in the areas that you want to be in, you kind of shoot yourself in the foot because as realtors, our job is to know what's up and coming. Our job is to know what's coming to the areas to help you make a wise decision.
What's the average earnest right now on a new build?
Anywhere between 500 to the highest I've seen is 5,000. No, actually, the highest I've seen is 10,000, depending on the builder. But the average is anywhere between like 2,000, I want to say.
That's not bad. It was a lot more. I remember I went to see Taylor Morrison back in like 21, 22 maybe. And Taylor Morrison wanted a percentage. So like their earnest was somewhere between $45,000 to like $60,000.
Oh my gosh. Yeah, I think the highest I've seen was K-Hoff. It was 10K.
Which is
the lowest I've seen is DR Horton, 500.
So at Richmond, when I did my Richmond home, mine was 5, which was awesome. It was easy just to get. It's easy to get in and just start even building a home. If you don't want to move yet, just start the process of looking into a new build that might take 12 to 18 to 24 months.
Yeah. And by the way, earnest money deposit you can get back if you decide to cancel within a certain period.
Like I got lucky with mine because I put down my earnest before everything went south, like rates went up. So I actually got the builder to they shaved off like almost $50,000 on my purchase.
That's amazing.
Because I just kept watching the base price go like this. It kept going down and down and down. And every time it went down, I'd email them, so I don't know if I can afford this house anymore. Rates are going up. The base cost went from $504 to $480, and now it's at $460.
Oh my gosh, you're such a troll.
What are we doing? What are you going to do for me?
No, and you negotiate throughout the entire time.
Well, of course. And that's the advantage of also having a realtor is you have someone that could advocate for you. And my realtor was on top of it. He was emailing them saying, hey, he was telling a sob story like, I don't know if my client's going to be able to afford this house anymore.
No, and it's true, like, especially when you're doing a build like yours, like things change and you can't lock in that rate. Sometimes you don't even qualify anymore. So how do you?
Well, and that's the risk you run with a new build too, is when you're actually not going into, what are they called? The ones that are ready to go?
Quick move-in homes.
So quick move-in homes are cool because, of course, you can close in 30 to 60 days.
Yeah.
But when it comes to like an actual new build where you're going to go to the design center and run everything, you don't know where we're going to be in 6 to 8 to 12 months on the interest rate. So you're sitting there getting pre-qualified at like a 4%, and then you might be closing at a 6%, which drastically changes everything.
Oh yeah, 100%. And that's a whole other topic of like.
And then if you go to the design center and spend way too much money, that's a whole other issue.
Yeah. And that's why the builders have such an up right now, because they're giving you like an interest rate of 1.99, and it's making these houses so affordable. It's almost like.
When you bought yours, was yours a spec or did you actually go to the design center?
No, mine was a spec. Oh, okay. Yeah. I wanted to move in a certain time frame.
Mine wasn't.
Yeah. And I was very open to like, I just wanted a house. You know, I just wanted my foot in the door. Like, that's really all I wanted. Now I know exactly what I would want in a house, but it took me buying one to understand that.
It just took you buying the process and everything.
Yeah.
Where, like I said, I got 50 shaved off, and I basically, that 50 was all the upgrades I did.
Oh, my gosh.
So I saved money on that home.
At least you saved money for, like, all the stuff you wanted at bare minimum.
Yeah, because, I mean, and it depends on the builder, too, because a lot of builders give you a lot of stuff just on the base model. So you have to also make sure you shop around with the builders, because there's a lot of builders out there that...
So many.
Because, like, when my parents bought at Sterling, everything at Sterling is ridiculous. Like, you can rack up a bill at Sterling. And it's not
my gosh. And, I mean, they're super nice homes, but, yeah, you can really rack that up. And that's why it's smart to, like, work with an agent, because... Not only do we have builder partners, but we know what every builder offers because we've been to it. We've helped someone buy one or we sold one.
And also, as a realtor partner, you can tell your client, like, for example, on my model, the bedroom downstairs is a study, but you can also upgrade the bathroom to make it a bedroom, where my realtor told me, he's like, do it. Just whatever it costs, do it, because at the resale value, if you ever do decide to sell it, you can sell it to someone that's a family of 4 that's got an elderly parent that doesn't have to go upstairs. So they've got their full bathroom downstairs. Yeah. So the only thing I regret is not doing the full patio in the back, because I should have just done that. Because eventually, now I'm like looking at the patio, I'm like, I want a bigger patio, like in the backyard. So that's the cool thing about working with a realtor too, is they'll tell you, hey, this will eventually help your resale value. If you might not want to sell it, but you never know. Life changes and you might want to sell, or I might want to sell that home and move into a bigger home because there's a nicer community and supplies
100%.
or something. So.
Yep. Life definitely changes.
So, Miss Bianca Betancourt,
Betancourt.
What is a good way for someone to start the conversation with you and reach out to you?
Yeah, best way is to either send me a text to my line, which I can always link, or just message me on any one of my social media platforms. Instagram is the one I primarily use. So sending me a message
what's
on-
your number and what's your Instagram?
My Instagram is _ Bianca Betancourt. And my phone number is 623-294. And then I got to look up the rest. Don't look at me like
I'm sorry, people. She doesn't even know her own phone number.
It's a new number. I don't know. I don't really give it out that much. I just have a copy paste, you know?
She airdrops them.
Yeah, I do. Yeah. So my phone number is 623-294-0942.
Well, thank you for giving us your number and looking it up. Thank you for being on the show. And of course, if you guys have any questions, always reach out to her. You can reach out to me. And of course, if you have any other real estate related questions, reach out to us. And then, of course, any insurance needs or any insurance questions, always reach out to me. Thank you for being on the show.
Or even topics that we can talk about.
Yeah. Send me a message. Topics, something you guys would want to learn about or know about. Yeah. I mean, there's so many things about real estate that we can talk about or learn about. And even me, there's a lot of being in the industry so long. I know so much, but there's so much stuff I don't know about. So if you need anything, of course, reach out to us. But thank you, Senorita, for coming out to Sun City West and driving behind all the golf carts. And
this is crazy.
Thank you for being on the show.
Thank you so much. I appreciate you.